Imagine a world where deals are done instantly without needing to trust a third party and everything just works. No middlemen, no delays, no costly fees. Sounds too good to be true. Well, it's not. Today, we're talking about smart contracts, the revolutionary technology that's changing the way we think about agreements, transactions, and the future of business. Whether you're just getting into crypto or you've been around the block, understanding smart contracts is critical. Stick around because by the end of this video, you'll not only know what smart contracts are, but also how they could redefine everything from finance to real estate and beyond. Right, let's be honest, the traditional way of doing business can be painful. You need to hire lawyers, trust the other party will hold up their end of the deal, and worst of all, you're at the mercy of slow, outdated systems that can take days, if not weeks, to process. It isn't just frustrating, it's expensive, but what if you could automate all of that? What if you could create contracts that execute themselves when certain conditions are met without needing a lawyer, a bank, or anyone else between? That's exactly what smart contracts do, and they're revolutionizing the way we interact with the world. So, what exactly are smart contracts? At their core, smart contracts are self executing contracts with the terms of agreement directly written into the code. They run on the blockchain networks like Ethereum, Solana, or Cardano, and they automatically enforce the terms of a contract when certain conditions are met. No human intervention is needed once the contract is set up. It's like having a digital vending machine for agreements. You put in the money, select the item, and then the machine delivers without any need to be involved. Simple, right? But it goes deeper. So let's dig deeper. How do smart contracts work? Well, think of a smart contract as a computer program that automatically executes, controls, and documents legally relevant events according to the terms of the contract. For example, imagine buying a house. Instead of going through weeks of paperwork, legal services, and legal fees, you and the seller could use a smart contract. Once the buyer sends the agreed upon amount in cryptocurrency, the smart contract verifies the transaction and the ownership of the property is transferred automatically on the blockchain. No delays, no questions asked. So, why does blockchain matter? Smart contracts are built on blockchain technology, which means they're decentralized and immutable. This is important because it ensures once the contract is deployed, it can't be altered or tampered with. It's like engraving your agreement in digital stone. This brings a level of security and trust to the digital world. Plus, since it's decentralized, there's no single point of failure. No government or corporation can shut it down or interfere. So let's think about use cases for smart contracts. Now, here's where it gets very interesting. Smart contracts aren't just for buying houses, like I used the previous example for. They can be used for all kinds of things. Imagine decentralized finance, also known as DeFi platforms, where loans and saving accounts can be managed by smart contracts, eliminating the need for banks. Think about insurance policies that automatically pay out when a claim is filed without needing to adjust to approve it, or supply chains that track goods from factories to store, ensuring transparency and reducing fraud. The possibilities are endless, and we're just scratching the absolute minimal surface of what is just possible when you think about smart contracts. So let's talk about why smart contracts are such a big deal. There are several key benefits that make them game changing. So, first of all, automation. With smart contracts, you can automate agreements and transactions, saving time and reducing the risk of human error. Once the conditions are set, the contract executes itself. This means there's no more chasing down signatures or waiting for approvals. Everything happens instantly as soon as the conditions are met. So then we need to talk about cost efficiency. Smart contracts cut out middlemen. No lawyers, no bankers, no banks taking a cut. This reduces transaction costs and speeds up the entire process for businesses. This could be huge savings, especially when dealing with complex multi party agreements. And then there's transparency and trust. Since smart contracts are on the blockchain, they are fully transparent. Anyone can inspect the code and see exactly how it works. This transparency builds trust because there's no room for hidden clauses or shady business. Plus, it's immutable on the blockchain, means that once the contract is in place, it can't be altered. What you see is what you get. And then there's security. Traditional contracts can be lost, altered, or destroyed. Smart contracts, on the other hand, are secure on the blockchain. They're nearly impossible to hack, and because they're decentralized, there's no single point of failure. This makes them incredibly secure compared to traditional methods. And then we have global reach. Smart contracts aren't bound by borders. You can interact with anyone, anywhere in the world without worrying about different legal systems or jurisdictions. This opens up a world of possibilities for global trade, cross border agreements, and much more. But it's not all sunshine and rainbows. Let's talk about the challenges and limitations of smart contracts. First of all, complexity. While smart contracts are powerful, they're also complex. Writing a smart contract requires solid programming knowledge and a deep understanding of blockchain technology. A poorly written smart contract can lead to bugs, vulnerabilities, or even financial loss. Remember the DAO hack? It resulted in millions and millions of dollars due to a vulnerability in their code. Then, as much as this can be a positive, it can also be a negative. They are irreversible. Once a smart contract is executed, it's final. There's no going back, no customer service to call if it goes wrong. It's great for trust, but very risky if the contract isn't set up perfectly. You have to absolutely be sure that the conditions you are coding are correct and all parties understand the terms. And then we have the usual legal and regulatory issues. The legal status of smart contracts is still a grey area in many parts of the world. While some jurisdictions recognize them as legally binding, others do not. Plus, there's the question of jurisdiction, which countries' laws apply if something goes wrong. As with all blockchain things, regulation is still looking to catch up, and it's not quite there yet. And then we have scalability. Blockchain networks, especially those like Ethereum, can become congested. High demand can lead to slower transaction times and higher fees, which could be a barrier for mass adoption. While new technologies and upgrades are developing to solve these issues, they're not finally resolved yet. So, what does the future hold for smart contracts? Well, as blockchain technology continues to evolve, we're likely to see even more sophisticated and user friendly smart contracts. Layer 2 solutions like Ethereum's Optimism and ZK rollups aim to reduce congestion and make transactions cheaper and faster. And with the rise of decentralized finance, also known as DeFi and NFTs, non fungible tokens, smart contracts are only going to become embedded in our daily lives. Governments and corporations are already taking notice. We've already seen pilot programs and initiatives to leverage smart contracts for things like voting, identity verification, and even supply management. As more industries realize the potential for this technology, smart contracts could become the standard way for doing business, making our world more efficient, transparent, and secure. So, if you found this video on smart contracts useful, do hit the like button, subscribe to the channel, and definitely check out this video on DeFi. I think DeFi is something you should definitely educate yourself on and know as much about as possible. So go check out the video right now.